Welcome back. Senior business editor Mike Eppel joining us now. We have a lot to get through, but I want to mention you just made a confession, Mike. You did not know what a
BCC was.
BCC was. Oh, there goes Sid.
I saw your conversation yesterday, and I'm going, what? I'm learning something new every day from what Sid doesn't know.
You just validated Sid.
Totally. Blind carbon copy. I mean, Natasha had to explain that in the conversation.
I didn't know what BCC stood for, but I knew what it did. I just didn't know what it stood for. Good to know. Good to know.
I had given it zero thought, but the more you know.
The more you know. Brought to you by Sid. Okay.
Yes.
Lots to get through today. Let's start with the interest rates here. You called it, you said it's the morning after hangover of higher interest rate. Ain't that the truth?
Yeah, but we did not know that the Bank of Canada was going to go a full 1% when it raised its interest rate yesterday. We thought maybe 0.75%, but they went full shock and awe, FISA, to send a signal to consumers that they're serious about fighting inflation. And now we're still, interestingly enough, even with a 1% interest rate increase in the overnight lending rate up to 2.5%. That just basically puts it back above where it was back in 2009. So we're still looking at fairly low, historically speaking, borrowing costs, but nowhere near the record lows that we had seen over the previous couple of years, which of course led to a spending boom and a real estate rush and all these other things. So we've got a big adjustment here for consumers who took on a lot of debt, let's face it. Mm-hmm. And as of this morning, the prime lending rate's up at the big banks to 4.7%. The return on guaranteed investment certificates is up. Savings accounts are seeing a little bit more of a payback too. So yeah, we're kind of living in a new situation here, and it's going to get even more expensive for borrowing going forward, because that was the talk from our central banker yesterday, Tiff Macklem, that they're nowhere near done fighting inflation, which is still expected to run at around 8% here for the next couple of months. So expect further interest rate hikes to come.
Wow. Okay. And we're also keeping our eyes on our neighbors down south with their inflation rates. What happened there?
Well, it's at 9.1% now in the United States. Wow. Gas prices up 60% year over year. Airfares up 34%. People are trying to travel if they can through the various jammed airports and such, and they're paying a lot more to do so. Food prices are up 10% year over year in the U.S. Egg prices there are up 30%. So inflation is at runaway pace. The U.S. Central Bank is going to be raising interest rates maybe a full percent in a couple of weeks' time as well. We're seeing the market reaction to this, FISA. It's not good. Stocks are down this morning by over 300 points on the Dow futures contract. And international markets are looking at, again, a real dent here. And the risk, this is the interesting thing. The higher interest rates go, the more elevated the risk is of a recession. There's a lot of talk about that, and it could be either happening just because or because of psychology as people start to hear more about the recession R word, and they start to cut back on spending, and it's a self-fulfilling scenario.
Yeah, we definitely know Canadians are concerned about that. Something else they're concerned about, housing cost, rents. What's the latest there?
Well, as real estate cools off, the rental market heats up. And the latest report from Rentals.ca and Bullpen Research indicates that rental prices over the past year have jumped substantially. Here in the GTA, we're talking about a 20% increase in some rental costs. 2 bedrooms well north of $3,000 per month. Remember, during the pandemic, people were leaving the city. The rental market had really stagnated and prices were dropping. Well, they're back up big time here because, again, people aren't buying homes. They're choosing to rent in the short term, if nothing else. And guess what? Supply demand, that's pushing prices for rentals up, which, of course, then you start to balance, okay, if it's costing me this much to rent, how much is it to buy? So you see that, that push and pull in the accommodation space, I guess we'll call it.
Yes. Michael Eppel, 5 seconds left. Good day to fill up at the gas stations.
Or wait until tomorrow, because we're expecting an even further drop in gas prices, maybe 2 or 3 cents. The price for oil is dropping substantially, FISA, and it's leading to a little bit of a break at the pumps.
Perfect.
A 3-month low, in fact.
Senior business editor Mike Eppel, always ending us off on a good note. Thank you so much for joining us. We'll see you tomorrow.